Welcome back. It's all about equities and fixed income. Today we are having a weekly review as well as weekly projections and possibly into a more optimal trading strategies for both equities and fixed income. With us here to discuss more this at length is Sarah Wanga, who's the head of research at AIB Capital. Sarah, welcome to Metropole.
Thank you for having me.
And Sarah, how was the market last week? What caught your eyes last week? Any big trades, both on fixed income?
Activity was pretty low. And fixed income?
Yeah, both fixed income and equities.
Okay, so in the equity market, activity was pretty low. Foreigners were net sellers, so there were sales in the big caps that would include Safaricom, Equity, KCB,
EABL.
Yeah, and EABL, yes.
Sarah, where do you link? We've had sustained net sales from the market for a couple of weeks back, and obviously the market now is at a 10-year low. If you look at the benchmark 2020 index, it's a level. It's now almost playing with below 2,400 points. If you, from your own analysis, the net sales, where is the portfolio going into? Where are you seeing? Which market are you seeing them heading into, and why are they exiting?
So foreigners, there's a lot of risk aversion, mainly due to concerns over the trade wars. And so foreigners are staying away from emerging and frontier markets. However, they have been interested in the bond market. So the Africa bond index is actually up this year. It's performed pretty well. So investors are looking for returns, but they want something that's safe. So they'd prefer the bond market as opposed to the equity market. Equity market, when they consider equity market, they'd consider the growth prospects of the various countries, but they seem to be a bit concerned over growth in Africa given the trade war fears and the commodity prices. And so for that reason, they're not interested in the equity market, and so they've been more towards the fixed income space.
Okay, but Sarah, obviously, valuations are very low right now. Is it the time to get in the market?
It definitely is a time.
But what's the growth story? What's going to drive valuations up back again?
So I would say there's value in the banking sector. So we've seen the banks, the ones that have released so far, report an increase in earnings. They've started lending to the private sector, which should help spur earnings growth in that sector. And then Safaricom is also a good pick. And insurance are struggling right now, and that goes the same for Bamburi. But EABL is doing pretty well, and BAT might have a few challenges, but it's still a good dividend play. Yes.
All right, interesting, Sarah. Let me bring you back to the conversation about risk aversion. That's been happening since the beginning of the year. Do you think it continues till the end of the year and on to next year? Because if you look at the investment timing, we're in 2019. Elections we come back in 2022. So if it's risk aversion, it seems that this could be a continued sentiment for the next 2 to 3 years. What's your thoughts, or what are your thoughts on that rather?
So it's risk aversion across, emerging and frontier markets.
All right.
And so between now, for Kenya at least, between now and 2022, I think we're hopeful that at least you see, investors are looking for returns. We've seen US lower their rates. Europe has got negative rates, and the question is, where do you make money?
Where do you make money?
Exactly. And so for that reason, as risk aversion reduces, they should start looking into African equity markets.
Okay, so it's really cyclical, and each market has its different triggers.
Yes.
So what would be the key trigger in your view for